Yeah, Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a productive trading day yesterday as we saw more market movements as we were coming back down in the overnights, and we are currently in a limit down situation. So the markets are sitting at a spot where we're in a limit down area. So we will see what happens at the open. What we've seen on these limit areas is once we open up, the markets typically sell off at the open, reach their circuit breaker, and then come right back in, and they really tend to hover around that circuit breaker area. I'm going to take a look at this overall. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. A real quick update, our website, tradersarmy.com, we are down today as we are doing a server migration. So if you are a Traders Army subscriber and member, keep an eye on your emails as all of our trade updates and trade feeds will be coming out via email today. All right, let's go ahead and get rolling. So starting with the S&P, here in the ES, we're in kind of a limit down situation. Now, what we saw yesterday was that we were up pretty strong yesterday. We had talked about this area for a breakdown. Unfortunately, didn't get any basing in front of this breakdown, so there's no reason to get in. And our 15-minute little level, which we identified during the daily market commentary, just barely missed entry. So when a level just, and really I say 15-minute level, we found this on the 5. I went all the way down to the 5 to find this little level because I wanted to keep the level fairly tight, and we just barely missed entry. So the level was a good level. It just barely missed us, and unfortunately didn't get us in. Now, what's the rule when we almost touch a level? If you know that answer, do me a favor, leave it in the comment section down below, but that would tell you why there was no reason to get in the second time we came up to that zone. Right? So if you know the answer to that, leave that in the comment section down below. There's a reason why you should not have gotten into this trade and been stopped out as it popped up through here. But it did tend to act as a bit of a fair price value area yesterday, as the markets kind of used that 2460 as a central point that it kind of bounced off of. So looking at today, we're in a limit down situation, have been for a couple of hours since we saw the right around looks like about midnight central. What I'm going to do now is just you've got to consider this area. When we open up, we're going to trade down, right? Like, look at what we did here. Let's look at our last limit down day, which we don't have to look very far to find that. We had that big sell-off on the first candlestick, and then price came right back up to the start of the limit move, and then it traded down. And that's what we're looking for. So I think that we can, expect to see the same today. Now, by the way, if you notice, that limit area still acted as supply. That whole area acted as supply because there's still sell orders up there that never got filled, that people said, well, once it gets back up to that level, I will sell. I would actually consider all of these limit areas are going to be, and we've got a fair amount of them now. All of these limit areas are going to act as supply when price returns back up to that level. So keep that eye out for today when we open. I'm not going to be able to give you the exact price of where that's going to turn because we're not sure exactly where that is. But just simply looking at the current bid and offers, we've got 8,300 contracts sitting at the ask and only 47 sitting at the bid. So that is worth considering as well. Looking at the NASDAQ, very much the same picture. Our NASDAQ level had come back right back to this the limit area from the prior couple of days. So that area, until proven otherwise, that area is still going to act as supply. But the same thing, if this comes down, which we anticipate that it will, then this area up here should act as supply right in here. So I'm going to put some lines around it, but know that you might want to go candle to candle up here. You could theoretically just go touch and go. But either way, I would anticipate price moving from that level and then coming back down. Crude oil yesterday. So crude oil, we got a really nice trade on the crude oil breakdown. For those of you that took the crude oil breakdown, you were very handsomely rewarded as it moved from 28. We're sitting now at 25. So if you took the crude oil breakdown, I would take your stop and move it down to 27 or even right here to above 27.11 as we may get a short covering rally at some point today. And if we do, take a look at this area in here for a potential on the reversal. Once again, there's no reason to look for a long as we're back to our lows of nearly 2003. You got to go back to 17 is really our next area of demand. If you go back to our lows, we're back to 2002, 2003 levels in oil. Gold. So let's take a look at gold. So crude oil was a really nice trade with a really nice breakout, and gold was a stop out. So gold level yesterday, we had a 15-minute zone. No real reason for us to think that this level wouldn't have held. There was no reason not to get in, at least for this move down to here. Price rallied up into here, gave us what was probably, let me do the 15-minute, was probably a really quick little stop out. For most of you out there, I know for me that it popped above where that where my stop would normally be, and in this case, my stop would be right up above here. So didn't really give me an opportunity. Didn't even give me the 6 candles. So just a quick stop out in that gold position as we rocketed straight through. And now in the overnights, we traded down. We're coming back up just a little bit. I think it's worth looking at this area up here as another opportunity for a reversal today. But it's a fairly weak level up here, not the greatest. So if you don't feel comfortable with that one, because our 4-hour, in our 4-hour, we've got a little bit more of a wider range bound kind of slight upward trend. But in reality, I think that it's just a new corrective move coming back down. Impulsive move coming back down after this big corrective move up. So I'm still overall pretty bearish. Looking at bonds and currency markets. So in the ZN yesterday, we had another really nice setup on the breakdown trade. So if you got in on the breakdown trade, you were handsomely rewarded on the ZN trade as it came to our target. Remember, I've got a box here, but I said yesterday I didn't anticipate this being a good long opportunity, just a target on our short. And that's exactly what happened as price continued to come down from that area. Now, if I look at this on a 4-hour, we've really come down strong here in the bond markets overall, and that would be the case from a fundamental perspective as well. And looking at this on the hourly chart, I've got to pay attention to this area up in here where price could reverse back to. This area is okay. This level up here is actually a better level and a better picture of a zone than the one down below because of the time of day that it was created. Obviously, stop has to go up above the wick in this case up in here. Could even go all the way up to this region on the stop. So that's the level I think is a bit better. Inside of the Aussie continues to trade lower. Our supply level that we had yesterday still intact. We did not quite make it up to that level yesterday, so I'm going to leave that one in place. The euro, the price came to our euro level, broke right through, so no entry on the demand as our demand area was a confirmation entry. And then our little wick over wick supply area in the overnight, which was created, gave us a very nice touch and go. So for those of you that trade the wick over wick areas, this isn't a perfect wick over wick area because I would need this lower wick to be a bit longer, but it was a pretty clean wick over wick zone. As we are gaining a little bit of bullishness here in the last few hours, but I believe that it's just an opportunity to get short on the next rally up. And so we're coming actually to a decent reversal point here. If you're so inclined, you could even try to get short somewhere below this area in here. Canadian dollar continuing its move down. It's actually really the one that's taken from a currency perspective. I mean, just with its high dependence upon oil, you've got looking at this one going way back now here on a monthly chart. We're going back the '03 numbers to find really our low. Actually, not quite as low. 2015 would be our low, but we're still dropping pretty hard in the Canadian dollar, so allowing that price to fall. And then last, but certainly not least, Great British Pound, Japanese Yen. So the pound in a precipitous downtrend. So certainly every demand area should be a confirmation entry in this kind of a market. Really, do we really expect our demand levels to hold? Not unless we get a confirmation entry, which is why trend is more important than curve. Trend is more important than curve, and trading with the trend is going to be what I'm going to look to do. So, if we continue to base above this 1-2 area, let's see if we get a breakdown below that zone. Japanese yen has actually remained pretty stable. Of all the currencies, it's really the one that's chopping sideways the most. So I've gotten really nothing to add to the yen. We still have a confirmation demand area down here. We've really not found a good trade in the yen. Going on like 4 days, maybe 5. There's really not been anything worth looking at inside the yen. I mean, even the levels that are set up have already been tested once. And so I don't have anything super clean. I'm a little bit cautious of this demand area down below. And so if we base, you could get a breakdown below here because this demand area here has already been tested once. But I would just say stay away. There's a lot of other directionally moving markets out there. Tonight, we have an open forum session. For those of you that are Traders Army members, please keep an eye on your email. Once again, we have no control over when this server migration completes at tradersarmy.com. Hopefully, it should be done within the next few hours. But we will send out via email the link to tonight's open forum session as well as tonight's options deconstructed. So thanks so much, everybody. I hope you guys have a great day. If there's anything you need, please shoot us an email, and we will get back to you. Thanks so much. Talk to you soon. See ya.